My name is Sande Protasio, Director Planning Research and Market Development at the Insurance Regulatory Authority of Uganda, a government agency that is charged with the three major roles, that is insurance supervision, insurance regulation, and insurance market development. Yeah, so today we are here to speak about marine insurance, which is one of the latest developments in the market. And we purpose to educate our viewers, our listeners, about these developments and how best they can position themselves to benefit adequately as business people, but also as individuals who have interest in international trade. Okay, marine insurance traditionally meant insurance of goods that travel on the water. When you look at the textbooks of 1960s, 1950s, 1970s, that's the definition you'll find. But with improvements in global businesses, the concept of marine has been expanded to cover insurance for goods which are imported, generally speaking, regardless of the means of transport, whether it's by train or by road or by air. As long as there are goods being imported and they have value, that protection that you buy should anything happen along the way. In insurance, we have collectively called it marine insurance. So take it as protection against numerous risks that are likely to happen on your goods during the importation process. And this kind of insurance provides protection of those goods from warehouse of the country of origin to the warehouse of the country of destination. Even before the effective date of 1st October, we had actually already noted some businesses taking up local marine insurance. The marine insurance actually we are talking about is local marine insurance. The only difference is that effective 1st October 2023, it became mandatory that whoever is involved in the international trade has to procure insurance for their goods from local suppliers. Now, whereas I mentioned that there had already been some bit of uptake even before the mandatory phase, the numbers have improved, though not so big, and understandably so, because this being a new development, there are issues related to systems, there are issues related to integration, because here we have a number of stakeholders. You have URA the other side, you have IRA this side, you have the different sector players, the insurers, the intermediaries, the clearing agents. All these have systems that have to necessarily speak to each other. So I think in the first quarter, October, November, December, we do not really expect to see a lot of businesses, but we are glad that some businesses are already moving through. But probably as we move to the second quarter of implementation, when all the systems have been tested and maybe if there are glitches fixed, and also we have done awareness and people now can seamlessly interact with the system, then we expect to see a lot of progress. And what URA is going to be doing is to do enforcement to the letter. That as they clear you for taxes, the customs officials have also been enabled in terms of capacity, but also in terms of system, to check on insurance, so that if you don't have it, then the applicable penalties will be applied. And we have developed these penalties based on the law. The penalties could be anything, but not more than 20 million, because we have the penalties given in the law. So why would somebody wait to pay 20 million shillings when they can buy insurance at $1 million or less? So it really makes a lot of sense to comply as opposed to wait for penalty. The unfortunate thing with penalty is that you are penalized, but you are not covered. So you have lost money in effect, but because it's a law in the country, and failure to comply would certainly leave us with an option, but rather to apply the applicable sanctions. Marine insurance is more or less a multi-peril insurance, and I will explain what I mean by multi-peril. It is almost covering most of the risks, except those which are specifically excluded. And what are these? If, for instance, you are crossing the border and there is a war, now insurers are likely not to cover that risk, because in insurance we call that a fundamental risk, if it's a war. But if it's piracy, piracy is stealing, theft, especially on water. The cargo sinks in water. The hull sinks with the cargo. There are times when the waters there is turbulence on the water, and they have to offload some cargo off the ship so that it gains stability. The cargo which is thrown into the water. Those are common practices in international trade. To save the whole hull from sinking, you get off some of the cargo into the water. There are goods which may break if you are importing glass and other delicate items. If there is an accident, collision, and a fire happens, or collision and there is general damage, all those risks are actually covered. People who are involved in importing things which are perishable in nature, and because of maybe a mechanical problem, you delay to reach, and everything goes to waste. I was told of a case of, I was having discussions with some people from Uganda medical stores. You know, with medicines, just a change in temperature, as long as they are able to say that the temperatures were actually below the required temperature, or there was some bit of leakage in the container, they say that that whole container is condemned. And here you're talking of billions of shillings. So all those risks are covered under marine insurance. So it is more or less a multi-peril, save for those risks which will be specifically mentioned as exclusions in the policy. Yeah. And I have mentioned one of them being war. For instance, destruction by war. Maybe in one country where you're importing from as you cross into another country. Yeah. We look at marine insurance as any other insurance, but there is a particular provision within the law, which I think could be Section 3 of the Insurance Act, 3 subsection 2, which makes it mandatory for all goods destined to the country to be insured by a licensee or an entity registered in Uganda. That also goes to labor. If you are employing foreign people here, you don't buy insurance from China because you are constructing our roads. There is an enabling law which makes it mandatory that you have no option. You can bring money to invest here, but you don't have the leverage to bring with it the insurance. Or you can bring some allowed people who have been given maybe work permits to work here, but you do not have the leverage to insure them back in your country of origin. So that is the basic law that we are using to enforce compliance, and really for good reasons. Because if you're operating within this country, why would you buy protection from another country as if we do not have protection? So as a country, it is a good thing, but also as an investor, it's a good thing. Because when you suffer a loss here, why would you make a claim in Japan or you know, or wherever? When you can submit a claim to an insurance company next door and the claim is paid. Why do you have to go through the hustle and bustle of following up a claim internationally? So that's really where we are coming from. That in addition to supporting the national agenda, it also makes a lot of sense. There is value, there is a strong value proposition for the investors, for the importers themselves to buy insurance from local suppliers.